So I wanted to quickly just run through how to calculate a lot of these numbers and a lot of the answers and questions that might come up. Try to help you guys out um, as we go through it. So this is the first example, and you'll notice here that I have our 2021 IRS publication 15-T. This document is found in the files, specifically in the module that you can download. We'll be using this PDF. It's a little outdated, but that's the one we're using. So, first example. Here's an example to show you what a complete scenario would look like. Sally's gross pay is $990. Sally is single with 2 exemptions. She started working at ABC store on 7/11/2018. She contributes 3% of her gross pay to the 401k. She is paid bi-weekly. Calculate the net pay after all tax and 401k deductions. So with that information, we have Sally's gross pay. That's the first thing. We would put it right here. Hire date, Sally. Marital status, single, 2 exemptions, S2. FICA, we're given the 6.2, so what we would do is simply take the gross wages times 6.2, that's a 6.2%. Medicare, same thing, we take the gross wages times by 1.4%, gives us the Medicare tax. 401k contribution, she says she contributes 3% of her gross pay to the contribution. So that's the contribution rate, percentage rate, and the amount, which is the percentage rate times the gross wages. Easy enough. This gives you your modified gross pay. So we take the gross wages and the 401k withholdings from employees, and it gives you modified gross wages. And in my announcements, I told you to use the state income tax withholding, 5%. Take it from the modified gross pay, not the gross wages. So there's 9 states in the U.S. that take it from the gross wages, and you have a flat tax rate. One of them is Utah, but since there's a lot of people that are not in Utah, we're just going to consider the state income tax is based off of the gross wages or the modified gross wage or gross pay. And then the modified gross pay. And that's why please look at the announcements as well, because I uploaded this template to the announcements modified template with the correct numbers. So now we have our modified gross pay here. Step 2 form, it was not checked. It doesn't say it was, so it was not checked. And then now we come to the federal tax, income tax withholdings. So we have the federal income tax withholdings. This is where we need to use this information. So Sally is single. We have standard. This is if it's checked. We have single, 2 exemptions. Gross pay is $990. So that means you can see here the adjusted wage amount, line 1, age is at least but less than. So we need to find the range that fits. It says $990. So that means it fits in between this and this. And that the tentative amount to withhold is $38.20, plus this percentage, 12% of the amount the adjusted wage exceeds, $865. So you can see my calculation up here. We have, let's see here, if I'm calculating this incorrectly, page 558. While I was on page 53. Oh, I was using the wrong. See, this is bi-weekly payroll. She said it's paid bi-weekly. This says in the instructions it says to use page 58. So I'm going to go to 58. Daily payroll. percentage method tables for manual payroll. So I'm going to use this instead. Curious. See, this is page 53, so it's a different method. And this is page 58. So you want to pay close attention to what page they're using, because there's different methods and they will give you slightly different numbers depending on what you use. So we're going to go to page 58 for this example, and it's biweekly single person. The range is the same, 535 to 17. Well, it's not the same, but it's still pretty wide range, but 535 all the way up to 1,711. Tentative amount withholding is 3830. 12% is what is above, and then 535. So I know that doesn't make sense as I talk about. We're going to walk through this calculation right here. So as we look at it, we have the modified gross pay, 960.30. That's in between this range. That is minus this minimum wage or the wage at least, so 535. So you take the total minus what the minimum is. So anything above 535 is going to be taxed at a 12% rate. 535 is essentially this right here. The tentative amount to withhold is 3830. That amount is essentially what needs to get taxed if it's $535 exactly. If anything over $535 needs to get taxed at a 12% rate. So that's exactly what this calculation is doing. We take the modified gross pay minus the minimum amount, is 535, times this 12%. So that gives us the amount over 535 that needs to be taxed at 12%. And then at the end of that calculation, we include the 3830. So what it's saying is if you make $535, you're going to get taxed $38.30. If anything over $535, that amount will get taxed at 12%. So we're going to have to pay $38.30 plus the increase above 535, and that amount will get taxed at 12%. So that's what this calculation is doing. And that gives us our federal income tax withholding of $89.34. Net pay employee is essentially gross wages minus FICA, Medicare, 401k, state, and federal income tax. Gives us your net pay to the employee. Okay, so now let's get to scenario one. Frank is married, and this says, again, page 53. So now we're going to move up to page 53, which is a slightly different manual payroll systems and percentage method tables. But pay attention to those, like I said. Frank is married. He started working, so we're going to have, say, Frank. Hire date, he started 3/2/2020. Marital status is married. His W-4 does not have step 2 box checked, so that means we're going to be on the left-hand side here. Married, let's assume if they're married that they're filing jointly. It's very rarely that anyone would file separately if they're married. It just doesn't benefit them as much. His employer provides medical insurance. The employer shares in the cost. So the insurance cost is $10,800 per year. His employer pays 60% of the total. Luckily, we have down here insurance deduction, $10,800 times 0.4 equals $4,320. Portion pay per period, $4,320 divided by 26 because it's bi-weekly. So there's 26 pay periods in a year. So 166.15 is what the medical insurance will be. And then FICA, we have our gross pay times our FICA, and then Medicare times there. And then let's see, gross pay is $11,066.67. He is paid bi-weekly. Calculate the net pay after all taxes and insurance deductions. And I don't see any 401k, so it doesn't talk about any 401k. Modified gross pay is our total minus our FICA minus our Medicare minus our medical insurance. So that gives us 10,000. Let's see here. 10,000. Why? So I'm double checking this, comparing it against my. Oh, no. I was doing, yeah. So I was doing something stupid. So we have our gross wages minus our medical insurance. And that gives us our modified gross pay, because we're not touching this. We're not taking that out of our anything until we get to our net pay. Our modified gross pay is our gross wages minus our medical insurance. And now for our state, we have our modified gross pay times 0.5%. And it's a no. Modified gross pay equal there. And now again, we use that same rough calculation. And I'm just gonna paste the, oh wait, not paste value, paste formulas, paste formatting formulas, and then change these numbers. So we have our modified gross pay, which is 10,900. So for married filing jointly on page 58, for biweekly, which is this, we have 10,900, which falls in between this range, minus 10,500 minus 1,134.78, which is our, right here, our tentative amount to withhold. And then we're taking our percentage that we're timesing by 24%. And then we're going to add back in that tentative amount to withhold of, oh wait, 1,134.78. So that is not that. So let's reword where it just said. So 7,610. So anything above 7,610 will be taxed at 24%, and then you plus in, you add back in this tentative amount to withhold is 1,034.78. So 1924, and now we're getting the gross wages minus all these things that we're deducting from their taxes. Or deducting like taxes and medical insurance, and it gives us the total that we're going to pay the employee. Okay, scenario 2. Maria, hire date 3/12/2021, is head of household, which is there, head of household. She started working at a cookie plant 3/12. She is paid bi-weekly. So again, head of household here. Her W-4 does have step 2 checked. So this says yes. That means we're over here on the right-hand side. She does. We're using page 53 to be sure, and she's a head of household. So we have FICA, Social Security, we have gross wages times that. We have Medicare times that. Does it say she contributes 2% of her gross pay to the company 401k? Gross pay is $929. It doesn't say anything about insurance, but it does say 401k, and she does have a 2%. So it's going to be the total times her 2%, and that will be what gets deducted from her gross pay to give her modified gross pay, which is 910.91. And then the state income, again, we're using this just so there's no confusion. We're using the modified gross pay, which is 45.55. It's a yes. Now we have to calculate, well, the modified gross pay is here. We have the federal income. And in some cases, that modified gross pay here will be different than what's here. In some cases, the federal takes into account of different states or some states, or if it's like a expat, they work out of the country or something. Some of these state income taxes can be deducted or whatnot, but we're not worried about any of that. So we're just going to copy and come over. So I have a federal income tax as a head of household we need to calculate. So head of household, her gross wages is $929. So we're here in this realm. So for the calculation, $929, anything above $635 is going to get taxed at a rate of 12%. And then we need to add back in the minimum, which is $27.30. And that gives us our 6041. And we're going to do our total minus our social, our Medicare, our 401k employee, and our income tax. And that gives us, I think I missed something. So we have our gross wages. I'm sure as you're watching it, you said, Brother Lopez, you missed something. But I'm just trying to go fast. Minus that, minus our federal. There we go. I was missing our federal. So really, we should probably just copy this net pay down. Maybe not. Employee health insurance. So maybe not. Let's not, because it changes with each scenario. So it says calculate taxes and other withholdings. Kimberly. Hire date is 4/12/2019. Marital status is single, with one exemption. So S1. She started working on the burrito plant on 4/12/2019. Pay period is for 2-week period bi-weekly ending 6/19. The company does not have a 401k plan, so that's a 0. The employer takes $75 per paid period for health insurance. So that's just a $75 per pay period. Gross pay is $1,005. Calculate the net pay after all taxes. Health insurance, 0. Modified gross pay is there, minus the health insurance. Income, state income tax is that times 0.05. Step 2 is, it doesn't say anything about it. So let's assume that, yeah, that's a no. And this is page 58. So that's different than page 53, modified gross pay. So let's go to page 58. Here we go. We have bi-weekly, every other week bi-weekly. And single here. Percentage method. This must be if they have exemption. The lower, the 58 is for exemptions. Anyways, Kimberly files a single, bi-weekly, single. Her pay is 1,005, so it's in between these. 535 and 1,730 or 711. So again, I'm just gonna take this calculation, move it here, paste formulas, and edit this formula. So we're taking the modified gross pay, we minus the 535, which we've seen before, and that's the 12%, and then the tentative withholding amount was 3830, gives us a 8570, and we have our total minus our social, minus our Medicare, minus our health insurance, minus our state, minus our federal. 720.92. All right, we are just humming along. Now, page 52. We'll move this up to page 52. Page 52. Here we go. December method weekly payroll. So we're going to do, and it's going to change because we're going to do different methods for this scenario 4A. So it says calculate taxes and other withholding. Taylor works as a copywriter at a local advertising agency. So this is Taylor. All these are going to be the same. So we say this is Taylor. I'm on a Mac. So hit F4. I'm just going to copy this down. Yep. Okay. Hire date. That's a 10/1/2020. And it's going to be the same thing, but here. So I'm going to move that over. Hire date. All these are the same. We're just changing how the monthly, semi-monthly, bi-weekly, weekly is changing. Marital status. Taylor works as copywriter. He is married with 2 children. So married 2. Same thing here. These are all formalities on how we fill it out. Nothing's really going to change until we get to the federal tax income, right? His salary is $50,000 per year, and he is paid weekly. So a little known fact, there's 52 weeks in a year. So we do 50,000, 1, 2, 3, divided by 52 equals 961.54. We're just going to copy that down because that is what we are. So FICA, Social Security, we have that times that, and then we have that times that. So that is going to be copied down. And all that is going to remain the same. Oh, wait. Oh, I just thought of something. This is not going to be the same. So we have 50,000, 50,000 divided by 52. This is 50,000 divided by 26 because it's bi-weekly. 50,000. 1, 2, 3 divided by 26. And then this is semi-monthly, which is twice a month. So this is 50,000, 1, 2, 3 divided by 24. And then this is monthly, which is 50,000, 1, 2, 3 divided by 12. All right. Formulas is still the same. It's going to be that times that. 401k contribution. Each pay period is 2%. So 2%. Now we're going to copy that down. And then the form, so we take the gross times the percentage. All right, and modified gross pay is our gross minus our 401k contribution here. Again, monthly, it's 12 periods, semi-monthly, 24 periods, bi-weekly, 26 periods, weekly, 52 periods. State income times 5%, obviously. And then step 2 of Form W4, he is married with 2 children. Step 2 is checked, so we're on the right-hand side. So all this is yes. Yes, 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 yes. All right, modified gross pay. Again, we're just going to match that modified gross pay for our purposes. Keep things simple. And now we're going to start using the different calculations. So page 52 is what we're on. He is married. He is 900, so it's right here. We're going to take this, move it down. We're going to take this. So it's 900. The minimum is 433. And then 433 is 12%. And on the 12%, it's 1920. So 80, 32. And then this should be all the same formula as well. $401k from employee, modified gross pay, and federal income tax. So we are going to populate all these as we go along. All right, now we got this one, scenario 4B, bi-weekly, so we have to change it from page 52 to 53, bi-weekly. Married, modified gross wages, 1923, so that's here, kind of the same area, right? Third down. Oh wait, where are we? Yeah, we're third. We're 1923. So we're actually further down. Oh wait, we're married. I thought I was looking at single, but we're, yeah, third down. So we got 865. I guess that's a lesson to keep in mind. Remember to consider where you are, make sure you don't make lapse of judgment and use the wrong calculations here. So now we're on page 54. We'll come here, married. The amount is 2,083. Same, third down, 2,083. But for this one, it's 938. Still 12%. And then 4150. And then lastly, we have here, page 55, married filing jointly. We have 4,166. Again, third down, 12%. Just the tentative amount to withhold is different, and also the amount that adjustment wages exceeds is different. But we're at 4,166. So it's 1875, 12%. and 82.90. All right, now what are these? Oh, these calculated for me, just pulled from what it was looking at. So we have this times 52 for the year. We have this times 26 for the year, all of them. So it says calculate the entire year. Question, what does the withhold show for each method? And basically, they're all pretty much exactly the same. I mean, give or take a few dollars, you're going to come out to be exactly the same, whether you get paid weekly, bi-weekly, whatever is the case. The taxes are going to be the same for you. All right, calculating SUTA and FUTA. So SUTA is state unemployment taxes. FUTA is federal unemployment taxes. And let's see if I can increase and make this bigger for us. Okay. Now, we have, using the information from Table 1 to calculate employee portion of the payroll taxes, create the journal entry for the payroll transaction. So we have Table 1, this is it. They've done it everything for us. Taylor, the start, gross wages. Taylor was a copyright, so essentially scenario 4 from the previous. The company matches 50% of the employee contribution. So, have the salary still 2%, but the company match is 50% of the employee contribution. Yeah, let's make it so I can see that better. So now we have our wages debit, which is simply our wages here. Credit, Social Security tax payable, which equals Social Security tax payable. Medicare, this is the employee portion, so it's pretty much this exactly. The Medicare, 401k payable, state income tax payable, federal withholding tax payable, and wages payable. And you'll see that this pretty much all the debits equal the credits because it basically just equals the total of the check. So you're given $961 to the employee. However, we're required to withhold a certain amount for taxes and other things. So then at the end, we give the rest to the employee, but it's debits and credits, obviously. And then for the journal entry for the employer, this is different because we are required to pay our portion of taxes. So we have 401k matching expense. So we match at 50%. So what that means is we take this divided by 2, or another way of thinking of it is the gross wages times 0.1. Exactly the same, right? But if they weren't doing 2% and they were doing 1%, then it would be a 0.5%. So the easiest way, in my mind, is just to take this divided by 2, or 50%. Payroll taxes, payroll tax expense. What's our payroll tax expense? Remind myself of that. Oh, that's all right. So let's worry about that in a second. Workers' comp expense. And that comes from our calculation over here of our employer. So let's do this actually. Forget about this for just 1 second. And that will give us this too, but let's use this to calculate our journal entry. 401k matching contribution, same thing, 50%. Social Security tax amount, we're matching dollar for dollar. Medicare tax amount, dollar for dollar. Employee year-to-date earnings through 12/15. I think I had a comment on this to use the 6/1 date. Some of your templates may be wrong, but if you use the template that you got for an announcement, I have the 6/1 date and not the different dates. But this is essentially employee year-to-date earnings. I do it kind of weird that for this, I keep it as this amount. And then down below, I do the year-to-date earnings, which is basically how many pay periods have occurred since 6/1 with a salary of $50,000 per year. And it's so for simplicity, I'm just going to tell you that I'm using 28 pay periods that have occurred times 28. So it's 26,923. But basically, employee year-to-date earnings through 12/15. So does it say that this is 12/15? That's the higher date. I don't think it says anywhere, but this makes the assumption that earnings through 12/15, and then this is the very end of the year. So essentially 12/31 back to the middle of the year, and you can do, I don't know how to calculate it. I don't even know if this is going to work. 197 days. But then 7 days in a week, right? So if you just divide it by 7, that gives you roughly 28 weeks. Are we doing this? Which one is this? Is this weekly? Yeah, so this is weekly. So 28 weeks and gives us 28 here. Just round it to 28. So that's what I did. FUTA, 6% for first 7,000. So that's a 0 right now because we're over 7,000 for the year. And that's why we needed this information. And then 3.5% on the first 33,000. We're still under that, so we're going to take the 3.5%. 0.35. And then lastly, workers' comp. I always get this messed up on what is 0.002. There we go. Just had to double check. The rest of this you don't really need. If you want, you can for the year to calculate those yearly amounts, but really the only thing we're worried about for yearly is this. Okay, now we can figure this out just based on these numbers. Workers' comp expense, 401k payable is the 401k amount, because this is employer portion. We have the employees portion over here, but this is just the employer's portion, the journal entry we're doing. Social Security payable. Why am I doing stuff? Medicare payable. FUTA. SUTA, workers' comp payable, workers' comp expense, payroll tax expense equals the taxes that we have to pay, which are Social Security, Medicare, FUTA, and SUTA. Now, this should equal our debits and credits. $118.75, $118.75. All right. Okay, and that is the net pay, SUTA, and FUTA calculations and payroll calculations for now. Good luck, and try to spend time figuring out, working through these calculations, and keep it in your mind.